At the Monetary Policy Board meeting of the Central Bank of Sri Lanka yesterday, its officials decided to reduce the standing deposit facility rate and the standing lending facility rate of the central bank by 100 basis points to 9% and 10% respectively. According to the central bank, the board arrived at this decision following a careful analysis of the current and expected developments in the domestic and global economy, with the aim of achieving and maintaining inflation at the targeted level of 5% over the medium term, while enabling the economy to reach and stabilize at the potential level. At the media briefing organised by the Central Bank of Sri Lanka to announce the latest decisions on monetary policy, Central Bank Governor Dr. Nandalal Veerasinghe shared insights on Sri Lanka's progress pertaining to the programme with the IMF.
The Treasury Secretary has said that we may be seeing Sri Lanka come before the IMF Executive Board on the 6th of December. And how do you think that situation will go? Do you think that we'll see some clarity on forward movement on the debt restructuring from bilateral creditors and others soon?
I am confident that we are making very good progress and we'll get assurances from all official creditors soon for the financial assurances that we need for us to complete the first review, the IMF, within the next month. That certainly will happen. So we are moving in the right direction and we will see a very positive outcome soon.
It's our understanding that the IMF Executive Board is yet to give approval for the second tranche. So can you give us more details on this and how long it will take and whether there are any recent developments?
On the IMF, what we can say, we will get the IMF program approved within the month of December. So making good progress, and that what is required for that is to assurance from official bilateral creditors from both OCC, Official Credit Committee, and Chinese Exim Bank. Chinese Exim Bank already given their consent. We hope that OCC will soon give us the consent, and so that IMF would be able to approve the second tranche. The first review will be completed within the next month. With that, there will be another additional flows also from ADB, World Bank, and IMF budget support will also come, and that will help government budget refinancing from next month onwards. So that's the process.
Analysts have voiced concern that growth has been lackluster, that we may not hit the 2% contraction for this year that has been projected by the central bank. Is that your sense as well?
This monetary policy changes in second half of this year will have impact on next year growth, not this year growth. This year recovery is already happening, and that's what we see. The continuous declining in GDP growth on quarterly basis happened up to Q2 of this year. But what we see Q3 and Q4 on quarterly basis or year-on-year quarterly growth will be marginally positive. But given the whole year, because we have a large negative growth in Q1 and some negative growth in Q2, so overall still will be marginally negative this year. But going forward, the next year onwards, I think I'm sure our expectation is that we will move into a whole year the positive growth territory. But numbers still too early. We have to wait and see what are the Q3 numbers and Q4 numbers, and on that basis we will rise.
You expect it to still be a minus 2% for this year?
This year, I don't think we should talk about the exact number. It should be around that range, I think.
Governor, every time the central bank reduces the rate, we don't see similar kind of reduction in the market lending rates, right, in a similar pattern. What are the measures the central bank has taken to reduce this downward stickiness?
No, downward rigidness, interest rates are downward rigid, especially in an environment where there are a lot of uncertainties. That's why last 6 months, although we reduced rates by say 450 or some basis points, because of the uncertainty in the debt restructuring, uncertainty in the IMF programs, and uncertainty in the completion of certain measures and the budget, all these things create a bit of a additional premium on the. That's why we are saying even government securities rates should be much lower than this compared to what you said our policy rates. That's what I said. Going forward, once we clear those uncertainties, then there's a lot more stability and predictability in the markets. The rates should come down fast. And obviously, it's a natural thing. Any prices downward, there's a rigidity. It will take some time to transmit that into a lower. When any prices or rates are increased, then obviously its transition is fast. That's a natural market phenomena. But we think, this delay is, we would like to see a fast adjustment of transmission of policy rates into market rates, short-term rates, and then government securities, and then obviously other market rates. That will happen. That's one of the reasons why we issue this direction, is to encourage and make the banks to bring that rates faster.